We're keeping watch on where the ripples from crypto's weekend flash crash have spread today. Welcome to the Daily Forkast, December 7th, 2021. I'm Angie Lau, Editor-in-Chief of Forkast News, covering all things blockchain. Well, the crypto capitulation even ensnared Korean game developers. Stock prices had been on a roll after recent moves into both NFTs and the Metaverse, but the weekend's crypto flash crash dragged them down in its wake. We're going to take a look at market moves and a whole lot more coming up. Let's get you up to speed from Asia to the world. Well, let's kick off with some of the top stories coming out of Asia today. First up, Japanese regulators are seeking to impose limits on domestic stablecoins. Now, the country's financial services agency is reportedly planning a legislative proposal that would restrict stablecoin issuance to banks and wire transfer companies only. And stablecoin transaction intermediaries, such as wallet providers, may also be scrutinized under tighter anti-money laundering regulations. Last month, the consortium of around 70 firms and top-tier banks in Japan announced they were testing a bank deposit-backed cryptocurrency, while Japan's central bank is developing a CBDC, so looks like the race is on in Japan. Meanwhile, over in India, Kotak Mahindra, a leading Indian private bank, has partnered with the crypto exchange WazirX. That's according to the Economic Times. Despite the Supreme Court's reversal of RBI's 2018 circular banning banks from dealing in crypto in 2020, most public and private banks have steered clear of crypto businesses, while others imposed their own bans preventing customers from interacting with crypto exchanges. So this deal is actually super important. Now Kotak has become the first big banking name to embrace crypto, despite ongoing uncertainty over crypto regulations in the country. And that's a pretty big signal, and it might be the start of potentially something bigger. You can find out those stories and more at forecast.news. Meanwhile, over to the markets now. The fallout from Bitcoin's weekend price plunge hit Korean game stocks. While many developers' stock prices surged after they announced new ventures in NFTs and the Metaverse recently, big names like KaKao and WeMade have now followed NFTs and game-related tokens south. Forecast News' Danny Park has more on the market action.
WeMade, the creator of global play-to-earn NFT game Mirror 4, saw its stocks tumble 10% on Monday in Asia. Compared to its November peak, the price is now down more than a whopping 30%. And Gameville, who announced plans to construct an NFT exchange in September, fell 14% on Monday, while KaKao Games and Cumtus, who are both developing NFT platforms, also fared badly. The stock drops follow many pulling their money out of play-to-earn tokens such as Decentraland's Mana and Axie Infinity's AXS coin, both of which have fallen over 20% in the last week. Kim Dae-jong, professor at Sejong University, told Forecast News he isn't worried about this current market dip, saying investment in NFTs and the Metaverse will continue nevertheless because they have original value. Meanwhile, NFT marketplace OpenSea has recruited former Lyft CFO Brian Roberts. Roberts played a crucial role in taking the ride-sharing giant public in 2019, and in a Bloomberg interview he said he's already planning an IPO for OpenSea. That has riled OpenSea users who say the company is abandoning the community it had grown by making such a move instead of an airdrop. For Forecast News, I'm Danny Park.
Rug pulls are becoming increasingly common in the crypto sphere. Money floods into a token project only for investor dollars to suddenly disappear. And that's exactly what happened just last month to thousands of investors of the Squid Game-inspired token, which traded on decentralized exchanges PancakeSwap and Dodo, and they were left empty-handed when developers left the project. So as new projects come online, how does one make sure that rug doesn't get pulled out from under your feet? David Lighton, co-founder of Lithium Finance, the man with the DeFi download, is here to shed some light on that for us. Good to see you again, David.
Thank you for having me, Angie. It's great to be here.
David, so many new people are coming into crypto. The chances of someone getting caught up in a scam are also rising. So how does one minimize this risk? What does one need to know?
I think if you want to be an investor, you really have to think and act like an investor. And so that means due diligence. research the founders. What does the product do? What's the white paper like? Remember that Squid Coin had a really conspicuously bad one. And maybe my favorite, are there any other top investors in the cap table? And finally, don't be fooled just because a token claims to have utility or a product. Squid Coin made that claim and it wasn't true.
So what are the red flags, though, to look out for? What are the clues?
Well, I think probably the biggest thing to look for is a social media presence that's excessively promoting, or sometimes they say shilling the coin. For example, discussing the price of the token or how much money it's going to make you is a major red flag. Do you see a lot of bots in the chat rooms? Are the comments on Twitter turned off? If you really want to be a geek, you can go on Etherscan and see which wallets specifically are selling tokens. Are the founders selling?
Always do your homework. Thanks, David. That is the DeFi download for you. And that's the Daily Forecast from our vantage point right here in Asia. You know what I'm going to say next? Hit like, hit subscribe, hit that alert button, and you know we always appreciate it. We do have a goal to reach more of you, so if you could share us with more of your peers in your network and your friends, all the better. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.